Hello to all traders and welcome back to another market review brought to you by Orbex. So all eyes are on the dollar this week after the Federal Reserve interest rate decision. It's not looking to throw up any big surprises. It is expected to keep at 5.5%, but on the top of that, will we see any signals going into the second half of the year? And if you don't remember from last year, we were expected to have 5 or 6 rate cuts this year alone, and it is possible that we might even have one by the end of the year. So it is actually quite a lot for us to digest. And obviously, if we do have any signals or surprises from the FOMC, then we could actually see the dollar being shaken up, and obviously gold will even be shaken even further, if I can get the words out correctly. So if we look on the back end of last week, where we saw this 70 to 80 dollar drop on the yellow metal, since then we have had a slight comeback, and more importantly, it hasn't delved into negative territory below 2300. So that's quite important for bulls because they do maintain this move to the upside. If you look here, we had this kind of false spike on downside, but it wasn't enough because we didn't close and have a confirmation below 2300. So since then, as you can see, in the past 4 trading sessions, we've seen quite a bit more of a bullish action on the price. However, if we look on the RSI, we're just seeing now this double top on the RSI. So we're just seeing if that's going to bring out a bearish divergence in the near term, at least, as you can see, going back into neutral territory for the signal. So if we look on the 4-hour chart as well, we're just seeing now where the opportunities lie. As you can see, since we got a big rejection at 2400, it has really seen quite a big sell-off. But as I said, in the near term, we have risen just roughly about $40 to the upside. So it's a nice steady incline. And if we keep on pushing even further, then bulls will have nothing to worry about. Obviously, if you are selling the yellow metal, just be wary that we don't see another move above 2350. That will be the next target for a lot of traders, because then we can see more of an upturn and then a more of a swing high as well. So with gold, it has been quite risky in the quite precarious in the last few trading sessions, especially after this huge sell-off here. But obviously, with geopolitical tensions easing, with a lot of the Fed's noise coming out of their camp that it is actually going to keep holding the rates, then we might not get any surprises at the moment. But just taking that into account, we're just looking on the dollar as well now. Just leave it on the 4-hour chart at the moment, because I just want to show you this slight bearish channel that's just been forming in the near term, and we can be having more of the same, possibly holding on to the 105 handle. This is quite important, because if we just bring the chart out even further, we didn't really see these prices since the back end of last year in October, November time. So really is a struggle for the dollar at the moment to maintain composure. But obviously, as I said, all eyes are on the Fed, and then not forgetting the non-farm payrolls on Friday, which is supposedly going to be a little bit lower than last time around. But we've said that before, and we've had quite big surprises in there as well to push the dollar even further. But obviously, if there are very good jobs numbers, it might make the Fed actually delay any rate cuts until next year. So that will be quite important in the near term as well. So let's see what's going to happen. Thank you very much for joining me on this video today. We'll bring you all the latest in the big moves in the market on our Telegram and YouTube channel. So stay with us, stick ahead, and we'll speak to you next time around. Thanks for now. Bye.